Hi, I'm Doug Friedman with Friedman Law Firm, and I work with Ronnie and Gail on the advanced cases when they ask me to have some input. And I just wanted to talk to you today about the legacy planning that's being the theme for this month. I saw Rachel's presentation. I really thought it was good, and there was one part about it that got my attention, and I thought I would mention to you in a little bit of a different vein. She talked about inheritance. I'm going to talk to you about businesses and legacy planning for businesses, because one way you can pass a business is by an inheritance, and there are a number of ways to do that. Hopefully it'll be done with some planning. If you don't do it with any planning, then chances are that that business may not pass the way that the business owner thinks it might pass. So at least if he puts it in his will and he passes it to one of his children, for example, that will get the business to that child. The problem comes if you have more than one child, or perhaps you have a second marriage and you have different obligations other than the traditional family obligations might be. But even if you have a traditional family, there are still reasons to do some planning with your business as a legacy. So what can you do? Well, the obvious thing to do is a buy-sell agreement. Well, you say, well, why do I have to do a buy-sell agreement if I'm going to pass it on to my child? Well, the reason is, one reason, for instance, would be it gets it out of probate. As soon as you die, your assets are going to be tied up. Your executor could end up running the business. It may not be the same person as the person that you intend to have the business. Why not have a buy-sell agreement so that when you die, the legacy receiver, so to speak, can go ahead and execute the buy-sell, carry it through, give money to your estate that can be used for any number of things that you might want it used for, and then that person would get the business. Doesn't have to wait 6 months, a year and a half, 2 years for something to go through probate. Doesn't have to worry that you cross over the center line in the middle of the night and run somebody over and have a big claim against your estate. All those things would be advantages to planning with a buy-sell agreement. Now, the new tax law favors this kind of planning. The biggest thing in the new tax law, as far as I'm concerned, is the fact that they have dropped the maximum corporate rate from 35% to 21%. Well, you know that a buy-sell that's an entity buy-sell or a stock redemption, the premiums are not tax deductible. So they're always after-tax money. Well, when you drop the cost from 35% to 21%, that's a 40% drop. So it means that it's easier to accumulate money at the corporate level. And of course, if you accumulate money for a buy-sell agreement, that should not be subject to the accumulated earnings tax. I think we're going to see more accumulated earnings tax issues in the future with these lower tax rates, but I don't think that it should be subject, that a buy-sell agreement, entity arrangement, stock redemption should be subject to that. In addition, they have done away with the corporate alternative minimum tax. Remember that in certain situations, the death proceeds could be subject to the alternative minimum tax. Well, now that's gone. So you have a lot of reasons with a corporation that you can institute a buy-sell. And it's clear-cut, there's no question, 35% to 21%. That's not what we're hearing mostly about. For some reason, we're hearing about this pass-through, the 20% deduction on pass-through, which is terrific. The problem with it, the problem, if you want to say from a sales standpoint, is that you have to wait to have a CPA figure out exactly what that pass-through is. It's really hard for you to figure that out. There are certain limitations in the law, and frankly, I've read so many different explanations of how that 20% pass-through works that I'm not sure that really anybody exactly understands all the ins and outs of that. So you could point out to someone who's in an S Corp or who's in an FLP or an LLC that you have a pass-through, but you may have to wait. Your sale could be delayed while that person's financial advisor, their CPA, figures out what it might be. So we're encouraging people to consider legacy planning with a buy-sell agreement, with a stock redemption, or even a pass-through as part of Legacy Planning Month at First Protective. And if you have any questions about this, please call Gail or Ronnie.